Tesla recently reported their financial results for the first quarter of the year, and although investors got excited about some of what Elon Musk had to say, the stock dipped below $700 per share as most of the excitement was baked in after Tesla reported record deliveries a month earlier. However, on Friday, Tesla stock rebounded by over 4% to close at $709. So in this video, I wanted to look at some of the news that may have caused Tesla to rebound, but also I think that Elon Musk had given out a huge piece of information about Tesla that I think went over most people's heads and no one was really talking about. I think this tidbit could actually be the most important thing to focus on in the first quarter, but everyone seems to be distracted by other metrics, so let's dive in. Also, stop using Yahoo Finance, stop using Google Finance, and check out our website, themarketisopen.com, where we have instant stock quotes and financial data for every stock going back 10 years, and it's all freely available. Last week, Barron's came out with this article highlighting why Tesla stock turned around and went higher, especially on a down day for the overall market. First off, I always like it when these news outlets try to explain moves in the stock with some sort of reason. These reasons could have contributed, but for example, billionaire Ron Barron, no relation to Barron's, could have woken up and said, hey, I want to buy more Tesla stock today, which moved the share price up. Just something to be aware of because the reasons given in this article came from some tweets which weren't from Tesla. The first comes from Pierre Ferragu, an analyst who also follows a semiconductor company, ST Microelectronics, who has said that the company estimates that silicon carbide revenues for the year will increase from $400 to $500 million all the way to $550 million, which is up from just a few months ago. He then says that they are Tesla's only supplier for silicon carbide, and Tesla is at least 80% of their sales. And he uses this information to estimate that it could result in Tesla being able to build 1 million inverters. Now, the Barron's article automatically assumes that this means Tesla will be able to build 1 million cars this year based on this news. You can watch my videos from the beginning of this year where I say that I think Tesla could deliver 1 million vehicles this year based on Tesla's current factory capacity and with a little help from Gigafactories Berlin and Texas in the second half of the year. So I agree that it's possible that Tesla achieves 1 million vehicles, but I don't think this is exactly what the tweet is saying. ST Micro uses silicon carbide in a variety of their products and applications, including, and they say on their website, solar inverters, industrial motor drives, home appliances, and power adapters. It makes sense that Tesla is a big customer since at least 3 of these main verticals are directly related to Tesla's business. Now, I'm not sure exactly which calculation Pierre used to convert the amount of revenue this company makes into inverters for Tesla. We're not sure if perhaps the prices changed due to increasing commodity costs, or maybe their supplier mix changed as well. Also, just because Tesla orders 1 million components doesn't mean they'll have enough batteries this year to actually produce that many vehicles. Additionally, inverters are not only used in electric vehicles, but in Tesla's Powerwalls and Tesla's solar systems as well. The solar system that goes on your house, not the one with the planets, though technically there's a lot of inverters in that solar system as well. So this doesn't automatically mean that more vehicles will now be produced. One interesting change that Tesla made recently is that they said that they'll only be selling the Powerwall with the solar panels or solar roof. You can't get a Powerwall by itself anymore, at least for the time being, and you can't get the solar system by itself either. You need them together going forward because Elon Musk has said that the solar will now connect exclusively to Powerwall. So to me, this means that while previously the solar system needed an inverter to invert the DC current to AC for your house, if you don't have a Powerwall, it still needs to work and you still need this separate device. A Powerwall also has an inverter built into it to invert the DC current from the battery back to AC for your house. So technically, these two products have 2 inverters, and by combining them together and forcing solar to connect to Powerwall, Tesla can reuse and cut the number of components that they need and cut costs. So I think that's very important, and it might also make it more difficult to tell exactly where Tesla plans to deploy these components or inverters that they're getting from ST Micro, since the business model has changed. Either way, it's likely a positive sign for Tesla, and it could also change throughout the year. Maybe next quarter ST Micro boosts its target even further, we don't know that yet. The second part of the Barron's article highlights another tweet, this time from Gary Black, who says that in Tesla's Q1 report, Elon Musk's $55 billion revenue milestone has now become probable. Now, I think we already knew this before, but Tesla outlined it clearly in their quarterly report, which was just released a few days ago. And so this suggests that it's possible Tesla could earn $55 billion in revenue this year, which would trigger the award. And in this most recent quarter, Tesla already started expensing this award. It looks like, according to the Barron's article, that the analyst estimates are closer to $50 billion in revenue for the year. And so if Tesla is quietly planning that $55 billion could be in the cards, then the company might beat estimates on average each quarter for this year. I like to be more conservative, and I think that baking in ultra-high revenue numbers for Tesla may lead to disappointment when Tesla comes close but doesn't beat those numbers later on in the year, and it doesn't leave room for error in case anything goes wrong. And that leads us to this next point, where it seems like Tesla managed to pull through and put up great record delivery numbers, even though Elon Musk described this quarter as one of the toughest ones Tesla has ever been through, at least in the last few years. It's almost like investors missed this because they were so focused on how good the delivery numbers were. And I think that it's not really misleading per se, but it's the wrong thing to focus on if you're a Tesla shareholder. Elon Musk also brought up this statement where he believes that the Model Y alone will be able to be the best-selling vehicle globally in 2022. He clarifies that he means by revenue in 2022 and possibly by number of units in 2023, and this would mean about 1.5 million units possibly by 2023 in order to surpass the Toyota Corolla. Now again, I think this caught a lot of people's attention, as it's a very catchy bit of information to look forward to. However, I don't think this is really news, as we sort of already knew this. Tesla has 4 cars in their lineup. The Model S and X right now have a production level of 0, and at their best, they can maybe do 100,000 per year. That leaves just Model 3 and Model Y, at least for the time being. Now, Giga Berlin and Texas will likely both be starting with Model Y, so I don't think this changes the overall outlook. If you expect Tesla to grow at over 50% per year, maybe they get close to 1 million vehicles this year and say 1.8 million next year, you would assume that most of the vehicles would be Model Y, and they're not really expanding Model 3. The SUV market is inherently larger than the sedan market by a factor of about 4 or 5, at least in the United States, but Tesla is expanding Model Y globally and investing heavily into the Model Y, so I think they have the confidence to know which vehicle to invest in. Nonetheless, this is exciting for Tesla, but I still don't think that it was the highlight of the quarter for me. Neither was the amount of cash that they had, or the Bitcoin that they bought and locked in some gains on, or the $1 billion plus of non-GAAP earnings. These are all great things, but I don't think that's why you own Tesla stock. To me, the most interesting thing in the quarter was actually the problem that they had. The backdrop around the world is that there's a semiconductor shortage, and this is affecting the global supply chain. In China, because they don't exactly trust the supply chain, Chinese companies double order in advance so that they have enough chips for their products. So that's why they may not have been hit as hard, because they have some buffer. But in the United States, everyone seems to be affected by the chip shortage, and when Tesla announced record deliveries, everyone said that Tesla bypassed or avoided the shortage. This statement here shows that this was not the case. Tesla was actually hit pretty hard by the chip shortage. But what they did was they quickly found new suppliers, in this case for microcontrollers, or that's all they're telling us, and then they wrote new firmware for these microcontrollers, and they're able to update the firmware over the air for updates, for example, and they were essentially able to replace a core part of their supply chain with new suppliers in just a couple months or a quarter or two, it seems. I think it would take years for any other automaker to change what chips they use, and if there's a problem, they would need to recall all of their vehicles in order to do a firmware update at the dealerships. And so Tesla's technology and software stack and the infrastructure that they've built proves that they operate very much like a software company as opposed to a traditional car company. And so I think that's why you want to stick with Tesla over the long term, because which other company did this? No one. All of the other automakers, GM, Ford, even Volkswagen, are shutting down plants, and their output is being hit hard by not having enough chips. But Tesla was able to leverage their existing over-the-air technology. They worked quickly to write new firmware, and they were capable of updating the firmware over the air, which no one else can do, in order to try to get themselves back on track and delivering vehicles. Imagine how many vehicles they could have produced had there not been a chip shortage. And so this is exactly what you would want your ideal company to do, to pivot quickly and not let some setback that's, affecting half of the entire planet get in the way of your mission. So maybe in the short term, this was a great move to help them hit delivery numbers. Perhaps in the midterm, like in a year from now, when maybe there won't be a chip shortage, Tesla might have multiple chipsets to manage, and that's a drawback which may cause more overhead. But perhaps in the long term, they now have multiple suppliers to source parts from, which will become especially useful as they intend to drastically grow their volume. The 1 million car goal for the year, or the 1.5 million Model Ys needed to make it the best-selling car in the world, these are aspirational goals, and they're the results of Tesla's hard work. But in order to get there, you need to have the right people in place, which I think this specific scenario now demonstrates more than ever. So the real key takeaway is that you know that Tesla is made up of teams of go-getters who will always do anything and everything they can to make sure that the company succeeds. Well, I hope you enjoyed this video. Let me know in the comments if you agree or disagree with my take on the news and highlights stemming from Tesla's most recent quarter. Please hit the like button and subscribe, and a huge shout out to all of our patrons that helped us support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.